Hello everyone and welcome to this new video on basic chart types. This video will be dedicated to understand essential chart types for smarter trading decisions. Okay, let's see the table of contents of this video. First, we'll look at the line charts. Then, we'll move on to the OHLC Bar Chart, followed by the very famous Candlestick Charts, and we'll finish with a quick conclusion. So let's begin with the line charts. It allows you to track trends in a very efficient way. So here's what the line chart looks like. You should know that it includes as little information as possible. It's also very effective in tracking historical events. It is possible to load it in a logarithmic mode to never forget what happened in the past. And also, you should know that chart types are fractal. Let's move to TradingView.com to analyze the line charts in detail. It's the most powerful software that exists to analyze trading charts. So I strongly recommend you to create a TradingView account. It's free. As I said before, we are going to analyze line charts. It looks like this. But first of all, I would like to emphasize the importance of the time frame. The time frame is a period that can be set at the top left just here. As you can see, I am currently in 15 minutes. Which means that I have a new data point every 15 minutes as the timeline below shows. And I can change it to 30 minutes, for example, to have more extensive data over time. If I choose daily, it means that I have a new data point at the end of each day. Let's discuss now a very important aspect of the line charts. This aspect is that line charts allows us to effectively locate the historical events that took place in the past. I have listed a few of them on Bitcoin, including COVID-19 in March 2020, the bull run of 2021, the bear market of 2022, the FTX bankruptcy in November 2022, the ETF Bitcoin spot approval in January 2024, and the last bullish news for Bitcoin was the Trump election in November 2024. So yeah, this type of charts permits us to locate effectively past events. Now, I would like to emphasize the importance of activating this logarithmic tool, which allows us to visualize what happened in the past. Indeed, if I deactivate it, you see that the COVID-19 crisis seems insignificant, unlike, for example, the Donald Trump election. While at the percentage level, we are not at all in the same orders of magnitude. This tool, therefore, helps us retrace historical events, because forgetting the past is being doomed to repeat the same mistakes. Let's now discuss the fractality of financial markets, which can be strongly impacted by the chosen time frame. For example, if I choose 1 hour time frame, it's very easy to spot a downward trend line. You can trace it just here, for example. And we can see that the price is bouncing on this trend line here, here, and here before breaking it. However, if I change, for example, these settings, and I change to 15-minute time frame, we can see that this downward trend line has a slightly weaker slope, and that there are even other trends during this trend line. Like here, a range trend, also called a lateral trend. So let me plot this trend here. You have to know that it was totally possible to make money during this movement, or this bullish movement. Even if during the 1 hour time frame we were in a downward trend. So it's important to remain consistent when analyzing a chart and avoid changing the time frame too often to prevent this fractality from causing errors in our analysis. Patterns may appear when the time frame is changed, even though they were not present on the initial time frame. Trading strategies must therefore be based on the same time frame to avoid inconsistencies. Okay, let's now discuss about the OHLC bar charts, which mean open, high, low, and close, and which allows us to have a clear view of the dynamics of the markets. It is this type of chart. It's simple. It's a bar with a small line that goes to the right and another to the left. This bar corresponds to the open, the highest point to the high, the lowest point, of course, to the low, and the right bar here corresponds to the close. The length of the bar provides crucial information that we didn't have in the line charts. which is the volatility during the open period. Now we have all the price variations during the selected time frame, rather than just the closing price. The high shows the maximum power of buyers, and the low shows the maximum power of sellers. Let's now analyze a bar chart on TradingView. Here we have a bar loop, which can be set by right-clicking in Settings. On Symbol, we can, for example, change the up color for green and the down color for red, and we can select the thin bar box. So we get this rendering, and the importance of this type of chart is to see the volatility during a specific period. We're going to now discuss the candlestick chart to get a comprehensive view of the price action. The candlestick chart is a bit similar to the bar chart in the sense that there is an open, a low, a high, and a close. However, the color changes based on the candlestick bar. For example, in this candle the opening is at the top, high it doesn't move, low doesn't move, and the closing is at the bottom, which means that this candle is the lower one. Price has decreased. In a candle, there is a body represented there, and there are the wicks, which are shown like this. So each candle shows the price action for one time period. If open is lower than the close, the candle is bullish, like this one, and plotted in green. If open is higher than the close, the candle is bearish, and plotted in red. And it is also possible that one candle can predict the next 3 houses. We will see in another lesson that it's possible to predict future candlesticks using specific patterns that can be recognized. Now, we are going to TradingView to analyze a candlestick chart in more detail. So to change the chart types, you click here and you select Candle. So let's analyze a candle. For example, this candle opens at this price and closes at this one. So the open is higher than the close, and so it's a bearish candle which is plotted in red. It means that the price has decreased during the selected period of time. It's possible to see the volatility of the candle during the selected time frame. For example, in this candle, the price reached a high here and a low here. We know all the price movement during the day. It's a very useful information. This type of charts is the most widely used because it contains the maximum amount of information, while also indicating at a glance whether a candle is bullish or bearish. Let's look at a quick conclusion to this class. The best chart is the one you're most comfortable with. There are none better than others. It's up to you to feel comfortable with the chart you use. Stay coherent in time frame when building a strategy to avoid fractality. Remember that different patterns can appear if you change the time frame. Your trading will be affected. Use the logarithmic tool to examine a long-term chart. And finally, candlestick charts allow you to gather as much information as possible on the chart. Thanks a lot, guys, for joining me. See you in the next course.